Hello and welcome to the lecture for part 1 of chapter 13, the last chapter we'll cover this semester. So this chapter deals with something we haven't talked about yet in our course, which is debits and credits and double entry accounting. It's really the same thing that we've been doing all along with our transaction grid, where we record some accounts going up and some accounts going down and making sure everything stays balanced. We've done that a lot this semester. Well, this is just going to describe a more efficient way that we can record transactions that way in a company where there might be a lot of transactions going on at the same time. I think you can see that trying to share that transaction grid amongst a bunch of employees that are trying to bill customers and receive cash and pay bills and run payroll, all of those things, it would be really inefficient. So double entry accounting is a way for us to record all those transactions and collect all that information in an efficient way. So I'll talk about how we're going to do that in this lecture. So recording transactions, the key thing is that each accounting equation element, so the columns that we had in our transaction grid, is called an account. So we'll have an account for cash, and we might have a couple of different cash accounts. Like remember, we had petty cash. I might have different checking accounts. Each one would have its own account. Okay, which the word account here, don't think of it like a bank account. An account is really just a way to categorize something. So supplies are an account, inventory is an account, accounts receivable is an account, accounts payable, all of those columns on our transaction grid are called accounts. And for every account that we have in a company, there's going to be three parts to it. One, a title, like the titles I just mentioned. And then there's going to be a space where we can record increases and a space where we can record decreases. So when we take all of the accounts together, we call it a ledger or a general ledger. So think of it as like a 3-ring binder where each page in the binder is a different account. I'll have a page where I keep track of cash, a page where I keep track of accounts receivable, increases and decreases, a page for inventory and so forth. That binder is called a ledger. So one of the things I'll have in an accounting system like this is a chart of accounts. So I'll have a listing of all the accounts we're going to use, so that we don't have problems with people wondering how to code things, okay? So we'll have accounts for assets, things we own, liabilities, our debts to other people, stockholders' equity, accounts like common stock and paid-in capital in excess, and we'll have accounts for recording revenues and accounts for recording expenses. Here's an example of a simple chart of account for a company, and you can see that they're in that same order, in financial statement order basically. And this company is using a 2-digit account number. You can use as many digits as you want. I worked in a company that had a 12-digit account number. So in this case, that 2-digit account number, assets always start with 1 in this case. Liabilities start with 2, owner's equity with 3, revenue starts with 4, and expenses start with 5. Now that's not a law, that's just what this company chose to do. You could do whatever you want in your company. And then the second digit differentiates one account from another. So you can see they skipped number 13 here. That's not because it's an unlucky number or something. It's because they wanted to leave a space available for maybe notes receivable if they have that account in the future. So they left some space for them. What's really going to determine how many digits you need in your account number is how many accounts you want to have. So my view on it is it's always better to have more accounts rather than fewer, as long as people can be trained how to code things properly, because it's a lot easier to consolidate information and summarize it than it is to take something that you put a lot of transactions into and try to split it out later if somebody asks you a question about it. As an example, this company has one expense account called wages expense. That's for every employee in the company. Well, you might work in a company that wants to know if marketing wage expense has gone up. compared to administrative wage expense or factory wage expense, something like that. So I think more accounts are better. The key thing here is having these numbers allows people to communicate clearly without, oh, you call it accounts receivable and I call it something else. Well, if we say account number 12, then we all know what it is. So here's an example of a T account, and you can see this has a title. This is the title for cash, and it has a debit side and a credit side, and it looks like the letter T. That's why we call it a T account. This is something accountants use a lot to kind of visualize what's going on in accounts and show how things move. And we'll use it in this chapter for posting, which I'll talk about in the next lecture. So in this case, for all accounts, the debit side is on the left, the credit side is on the right. It doesn't matter what type of account it is, debit left, credit right. So depending upon what type of an account it is, either the debit side will record an increase in the account or the credit side will record an increase in the account. And I'll explain it three different ways. So the first way I'm explaining it is just straight up telling you what the rules are. So in this case here, increases to cash are recorded on the debit side. So for all assets, current and long-term, increases are recorded on the debit side. Assets increase on the debit side. That means that they decrease on the credit side. So what this is telling me here is that this company had a $25,000 increase in cash. That was transaction A. Transaction B had a $20,000 decrease in cash, so they spent money. Let's see, I don't see, it doesn't have all the transactions here. They had a $7,500 increase in cash. They received cash, put it in the bank. And then they had 3 more decreases in cash where they paid money out. Now I would take the debits minus the credits. I would get a debit balance. So the balance of this account is $5,900 on the debit side. So if I ask what the normal balance of an account is, it's always going to be the side in which it increases. So the normal balance for cash is debit. If I had a credit balance in cash, that could happen, but it would mean I had negative cash. I'd been bouncing checks. So it could happen, but there are some accounts where it can't happen. As an example, I can't have negative office furniture. That can't happen in the real world. So the normal balance of an account is a side where it increases, and for assets, that's the debit side. Now for liabilities, they increase on the credit side, and then stockholders' equity also increases on the credit side. That means the components of stockholders' equity, the things that influence it, follow those same rules. So revenue increases stockholders' equity, so it's going to increase with a credit as well. Expenses pull down stockholders' equity, so they'll increase with a debit. And dividends pull down stockholders' equity, money we share with our owners, so that increases with a debit as well. So that's the first way of explaining that, is just what are the rules. The next way to do it is by looking at the accounting equation. So we've seen this 100 times by now or more. So assets on the left side of the equal sign increase with a debit. What's on the right side of the equal sign increases with a credit. So liabilities increase with a credit and stockholders' equity does. So within stockholders' equity, paid-in capital will increase with a credit, retained earnings will increase with a credit, but treasury stock, which reduces stockholders' equity, will increase with a debit. When we look at the components of retained earnings, net income is going to increase with a credit, and dividends will increase with a debit. So the last way I'll show you is how a lot of students remember it, to be honest, which is a simple pneumatic. And I even added a graphic there to help. So the pneumatic is dead clerk. And I know clerk isn't spelled exactly like clerk is spelled, but you can still keep track of it. So I do that in the format of a T account. So dead on the left side starts with D for debit. So I know the left side is my debit side. And then I can say what increases with debits. Expenses increase with debits, assets increase with debits, and dividends increase with debits. What increases on the credit side? Liabilities increase with credits, revenue increases with credits, and capital accounts increase with credit. So if I write dead clerk on a quiz or an exam, that's going to be a really quick way for me to not have to keep all of those rules in my head, but instead refer to that mnemonic or that memory device. So also, I want you to remember that if, say, an expense increases with a debit, that means an expense will decrease with a credit. So these rules are for how we increase an account. We'll do the opposite if we decrease it. So double entry accounting is how we record transactions, and every single transaction in a business, I don't care what it is going to impact at least 2 accounts. It could be more, but it's going to be at least 2 accounts. And for every transaction, debits have to equal credits. That is an absolute requirement. That has to happen on every single individual transaction. And then we follow the rules of debits and credits to know how to journalize that entry. So journalizing is how we record transactions in a journal, okay? So the steps involved in doing that are, number 1, carefully read the description of the transaction and determine what types of accounts are involved. And when I say types of accounts, I mean what categories do they fall into? So is it an asset? Is it a liability? Is it an expense or revenue? Those kinds of categories. So think, what type of categories are being impacted there? For each account, determine if that category is going up or going down, and then determine whether the increase or decrease should be recorded with a debit or a credit based on the rules that I went over, and then you record the entry. So as an example, let's say that I borrow money from a bank by signing a note payable. Okay, so what categories are impacted there? Well, assets are impacted because I'm getting cash, and liabilities are impacted because I'm signing a note payable. I owe money. So then I would say, what's happening there? Are they increasing or decreasing? Well, cash is going up, okay, because I'm getting cash. And notes payable, liability is going up because I owe more money now. So when I look at the rules on that dead clerk memory device there, I see assets increase with a debit and liabilities increase with a credit. So in that case, the way I'll journalize it is I will debit cash, that'll increase that asset, and I'll credit note payable, that'll increase that liability. So I've recorded that transaction in a way that has the right impact. So let me show you an example of journalizing here. So the format looks like you see on the bottom there. And we enter the date in the date column, obviously, and it's just 3 letters for the month and then the number of the date. And then I put the title of the account, and it always starts with debits. It doesn't matter what order they're in, except that debits come first and credits come next, okay? So I put the debit there, and it's all the way left justified. You can ignore the post-ref column for now. We'll come back to that. And then I record the amount of the debit in the debit column. Then I record the credit, and you can see I indent about four or five spaces there, indent and record the credit, and then I record the dollar amount under the credit column. So in this case, what's happening in that transaction is the company is buying supplies with cash. Okay, so that's what that is telling me. They've also added a memo line down there, which I won't require you to do in your homework, but in the real world, I would always require people to put a memo line to say what is it that's going on here and provide some detail for that. The reason is you might look back at an entry that you made a year later and not remember why you did it, or maybe somebody did some entries and then they left to another job and you have to try to figure out what they were doing. So having that explanation is really important. So that's the end of this part, and I'll pick up the next part with kind of a more detailed example, and I'll also post some video practice for some problems. I'll talk about trial balances, and then I'll talk about the closing process in part 2 for this. Please remember, if you're working on your homework and you have problems, don't hesitate to shoot me an email and say, gosh, I'm really struggling with this. Be as specific as you can. Don't just say, I don't get the homework, but be specific about what aspect of what problem is troubling you, and I'm happy to send you some help. A couple of you have done that, and I'm glad when people do that, so please don't hesitate. And as always, shoot me an email or give me a call if you have any questions. Thank you.